Well, hello, everybody, and welcome to another Rule Report. My name is Raúl Arcos Hawkins, Business Development Specialist for the Center for Rule Affair. And today we are going to discuss business costs and expenses, plus provide a couple of best practices. It is important to know the difference between the costs and expenses. Some small business owners still get the two confused. So today we're going to discuss just a little bit about it. Costs can be defined as the cost of goods or services, also known as COGS, which are associated directly to the cost of sales or income known as variable costs, such as raw materials, piece rate labor, and commissions. As some examples, expenses are the indirect cost of having a business, also known as fixed cost. An expense is an ongoing payment. For example, here are some of the most common, which is payroll and payroll expenses, accountant and a bookkeeper, lease or purchase of a space or a building, office supplies, advertisement, outside services, and some of the most common outside services could include pest control, snow removal, and landscaping. Other expenses could be internet, phone, and cable, utilities, insurance. Some of the most common type of insurance are liability, workers' compensation, and the umbrella. Fees can also be put in as an expense. Some of the most common can include bank fees, subscriptions related to the business, payment processing such as Square or Clover. You can also consider an expense as the money you spent to generate revenue. A key factor that will help you determine your costs of goods and services is to determine the cost of raw materials and any costs associated both directly and indirectly in the production of that specific product or service. There are three specific types of expenses. One is fixed. A fixed expense is one that does not change or changes slightly. A great example would be your monthly rent that a business pays. A variable expense vary from month to month and are typically a business's largest expense. An example of a variable expense would be payroll or any overtime that you are paying the employees. A third one is a periodic expense, and those tend to happen a little bit infrequently. They can be hard to plan for because it could be money that you need for an unexpected repair or replacement of any type of machinery or equipment. One of the most important things to consider is the costs and expenses for tax purposes. Any expense that meets the IRS definition of ordinary or necessary can be deducted. To be written off, an expense needs to be incurred by a business intending to make a profit. Some expenses may be fully deductible, whereas some are partially deductible and won't be fully deducted the year they were incurred. Some examples of allowable or fully deductible expenses include advertising or marketing. This includes any promotional items that you're making or that you're having, such as say that you're giving away a product because you're launching it. That could be considered marketing advertising expense. Say that you have flyers or you're printing off posters. That's considered marketing, and that's an expense that can be deducted. Bank fees and interest, business mileage, commissions, educational expenses for employees, employee benefits, equipment maintenance and repair, furniture. This one's going to be something that you're going to have to talk to your accountant, which is your home office space, because there are certain requirements that you'll need to meet in order for that to be a deduction. And we always recommend that you talk to your accountant to get the information that you need, specifically when we're talking about those certain requirements you have to meet in order to have a home office. Insurance, membership fees, these have to be business-related expenses only. Legal fees, office supplies and equipment, payroll, which includes employees and contractors, rent or office lease, mortgage payments, software, some costs of travel, utilities, payment processing fees. So we've seen that some of the businesses are trying to combat the inflation and have started charging customers for using credit or debit cards. Charging a customer a fee for using a credit or debit card creates a taxable income for that business, thus increasing those tax liabilities. It is considered a variable operational cost, which is, again, tax deductible. And it's super important that if for your processing fees that you're obtaining from Square or Clover, remember those are tax deductible. They're a variable operational cost. What are some examples of non-deductible expenses? And remember, not all business expenses are tax deductible. And here are some examples. Demolition expenses or losses, educational expenses incurred to meet requirements to conduct a business, government fines and penalties, illegal activities, lobbying expenses, or political contributions. If you would like to know more information on costs and expenses, you can visit the IRS. One of the publications is publication 535 from 2021, Business Expenses. The link is in the comment section. Here are some 6 tips to make sure your expenses, you manage them easier, which again is the easiest way to reduce your tax liability. Number 1, maintain a good record keeping. Receipts and other documentations of your business expenses will come in handy if you're ever audited. The IRS requires that some receipt records are kept for up to 7 years. Number 2, separate personal and business expenses. Separating your business and personal expense right away when you establish your business by opening a separate business account. This is probably one of the biggest mistakes that business owners make, is mixing both personal and business accounts. Unfortunately, we see it a lot, but biggest recommendation, as soon as you start your business and you have all the requirements in order to open that account, is to separate both accounts, to have your personal and then to have your business account. Number 3 is keep up to date with the expenses considered tax deductible. Most expenses, again, that are incurred by a business are tax deductible. So make sure that you keep up to date on what those expenses are. Number 4, save business travel expense receipts. Many businesses travel, so those expenses are tax deductible. Keep these records of the costs like transportation, lodging, and some meals usually is 50% of the cost. Number 5, record expenses as soon as possible. So say that you purchased something or that you got an invoice. Make sure that you get in that habit of recording these expenses as soon as possible, especially if you are doing all the bookkeeping yourself. Number 6, check and review expenses on a regular basis. QuickBooks can be a great way to keep track of some of these business expenses. And to catch errors, you can consider double entry bookkeeping. This can also prevent fraud. Again, starting a business or having one can be stressful, but knowing the difference between the business costs and expenses is a great way to start. We always recommend having a certified public accountant who can provide assistance and very valuable insight to the costs and expenses of your business. For additional information or for further questions, you can reach out to one of the business development specialists in your area, or if you would like to learn more about a loan, you can reach out to any of our loan specialists. You can find the contact information by visiting our website in the link that's in the chat box. You can follow us on social media. We are here on Facebook and Twitter at CFRA. In Instagram, we're at Rural Nerd. You can also find us in LinkedIn. We continuously share resources that we develop and promote the events that we are hosting. You can visit our website at cfra.org. Again, I am Raúl Arcos Hawkins, Business Development Specialist for the Center for Rural Affairs. Thank you for joining us.